the commodities cycle is reversing. That's according to analysts at Goldman Sachs. But how will this, combined with political and economical events, affect the price of oil moving forward? Joining me down the line to discuss is Thina Margarethe Saltvedt. Thina, West Texas Intermediate crude trimmed its worst start to any year since 2009. Amid estimates, US fuel stockpiles increased for a third week, signalling slowing demand in the world's biggest oil consumer. What have been the main factors contributing to this poor performance?
I think that's what we're seeing going on in the US now has much to do with the cold weather in December. I think this is, we're going to see an upswing in the growth when we're going further out in January, February. So I think it's the effect of the cold winter where people are staying inside, not driving that much, rather keeping warm and safe. I think that has something to do with the weak demand for oil and especially fuel products as well in the US. So I think that will be improved when we go out later this year.
In fact, analysts at Landesbank are adopting a bearish outlook for the first few months of the year, adding maybe the trend of better than expected US supplies will continue in 2014. Is this in line with your estimations?
I don't think it will be better than expected, but I do have quite high expectation to the oil production in the US for this year as well. I think we have seen the top of the growth rate, but I still think that, that's from a very low level. So now I think the rate of growth will slow down, but still the upswing will be quite big for the next few years. So I still think that you will see a lot of new oil coming into the US market, and especially the shale production is the main contributor to that. So yes, I think the US will continue to increase the production and at a fast rate.
The deal between Iran and 6 major powers intended to help resolve a standoff over Tehran's nuclear ambitions will come into force on January the 20th. Some analysts and traders took this to mean that the 1 million barrels of Iranian oil kept off the market by sanctions over its nuclear program would return soon. However, others believe a nuclear deal in Iran doesn't ease tensions. In fact, it may raise them. But what do you think?
I don't expect that we will see 1 million barrels of oil coming into the market very soon. First of all, this is it's a limited amount. It's more like an implementation period, Obama called it, and that's for 6 months. And what we're going to see that some of the sanction will be lifted, but that's the sanction on the shipping traffic, which I think is the most important. The insurance in the EU and the shipping traffic, I think that's the most important part we're seeing, because the sanctions against the oil production in Iran is not going to be lifted in the first half of the year or the first 6 months. So what I expect is that you will see about 200 to maximum 300,000 barrels coming in, and that's more or less because of the transportation and the insurance part of it will improve, and then you can have more ships actually transporting Iranian oil into the market, but still the sanctions against the production will remain. Also, it's a speculation that, or it's interesting to follow how a change in the U.S. position against Iran, or if you actually see that EU and U.S. will remove all the sanctions, will influence the cooperation between other important oil producers in the area. For example, there have been a speculation that the relationship between the U.S. and Saudi Arabia has soared a bit, and still I also think that Saudi Arabia will cut back on its production if Iranian oil is coming back to the market. So that will be interesting to see. But I still think they will stabilize the market and the prices. What I think it's important for the future as well is also that the OPEC cartel might have to start implementing country-specific production targets again. If Iran comes back to the market, or if they remove the sanctions, they will increase production. At the same time, Iraq is increasing their production, because otherwise the total market might be overflooded with oil, and prices might drop sharply and below the unofficial price target of $100 a barrel for OPEC.
Deutsche Bank predicts average prices in 2014 of $88.75 a barrel for WTI and $97.50 for Brent. The estimates are about $10 a barrel lower than 2013 levels and less than that all-important $100 a barrel price you mentioned. Could you talk us through your 2014 price estimations for Brent, please?
We have a bit higher estimate for 2014. We'll have $107 a barrel. I still think that you will see a lot of US oil coming up. Not really into the market because there's still a lot of difficulties getting US oil into the market, mainly because they have an export ban. They're of course discussing if they're going to lift that now, but that won't happen in 2014. I still think that the turbulence you've seen in countries such as Libya, South Sudan, Nigeria, and also the increasing turbulence in Iraq will continue to influence the market. So I'm not as optimistic of the production within the OPEC. I'm rather more optimistic about the production coming from the non-OPEC countries. So I don't expect that sharp fall in oil prices, a smaller fall in oil prices, and a bit better balance. But of course there is an upside risk to this, and that's the turbulence going on after the Arab Spring.
Thina, thank you very much for your time and perspectives today. Pleasure speaking with you. Well, that's all from me at the moment, but click back to Dukascopy TV for today's press review with Thomas Taplin looking at Swiss banks relocating in the UK. Goodbye for now.